Hi students, welcome. I am Dr. Majini Jasballa, Assistant Professor, Wales Institute of Science, Technology and Advanced Studies. In this video, we are going to learn about the goodwill, introduction, meaning, definition, need and features. Week 8, Lesson 3. Now we can see the introduction about that goodwill. It is very difficult to give an exact definition for we can see the introduction. It is very difficult to give an exact definition for the term goodwill in accountancy. Some accountants are of the opinion that attachment of customer to a particular business is called the goodwill. It may be described as a value of all the favorable attributes relating to the business enterprises. For example, the customer's attitude, desirable location, pleasing surroundings, and superior products, absence of competitions, etc. In the words of Lord Eldon, goodwill is nothing more than the profitability that the old customers will resort to the old place. It is the value of the reputation of the firm in respect of profits expected in future over and above the normal rate of profits. From another point of view, goodwill is the value of the reputation which the business built up due to its efficient service to its customers and the quality of its products. This reputation enables the business to earn more than the normal profits earned by the other businesses. Most of the writers have defined goodwill as the present value of a firm's anticipated excess earnings. Now we can see the definitions. The attractive force which brings in customers, the benefit of a good name, reputation in connection of a business, the one thing which distinguishes an old established business from a new businesses. The whole advantage, whatever it may be, of the reputation and a connection of the firm, which may have been built up by years of honest work or gained by lavish expenditure of money. Drago versus Hunt. Next, we can see the need for valuation of goodwill. In case of partnership firms, it becomes necessary to value goodwill. Whenever the mutual rights of partners change, the following are the circumstances in which a partnership firm has to value its goodwill to safeguard the rights of the partners. When a change in profit sharing ratio among the existing partners takes place, the next point is when a new partner is to be admitted with a share in future profits. When an existing partner is to retire or a partner dies, when two or more firms amalgamate. The next point is when a partnership firm is sold and dissolved, the factors affecting the value of the goodwill. Next, we can see the factors affecting the value of goodwill. The first one is quality. Quality is most important for all the organization, right? Even if it is a new organization or the reputed very good old organization, the quality is most important. If the firm enjoys the good reputation for the quality of their products, there will be ready to sell the product and the value of its goodwill thereby will be high. Normally we can see. The second point is location or site. The location is most important for the organizations. Even the manufacturing company or the reselling agencies also, the location is most important. The profit of the business and the organization goal can be achieved. The main reason one is location. If the business is located in a prominent place, its value will be more as compared to the place which is not popular at all. Then we can see the competition. The value of goodwill will be high in those businesses where there is no competition or competition is negligible. The next point is capacity of management. If the management is capable, the firm will earn more profits and that will raise the value of the goodwill also. The management capacity is not good for that particular piece. Now it is very difficult to achieve their goal of the organization. The capacity is induce the customers to buy the product of the particular organization. So the capacity of the management is most important, because the very good capacity of the management, they will give more advertisement and they can make alteration for their product, so they can increase the profit as well as the increase the value of the goodwill also. The next point is capital required. The most important thing of the organization is capital. Without capital, they can't run the business. If a business requires lesser amount of capital, it will have more buyers and hence its value of the goodwill also will be very high as compared to the business requiring the higher amount of capital. Next, we can see the next point, the nature of business. The businesses dealing in goods of a monopolistic type will have a higher value of goodwill. The next point is types of customers. The value of goodwill depends upon the capacity of the business to earn the profit and as well as the based on the type of customers. The excess profit can be earned only if the customers return to the firm in larger numbers. Therefore, the type of the customers which a firm has an important factor. Such customers will go to the old place even if the ownership changes. In case of a firm has more of such customers, its value of the goodwill also will be very high. Then we can see the time. A business establishes some reputation in course of time. A businessman who has carried in his business for a longer period, they will enjoy more goodwill since that is a better known to the customers. Next, we can see the kinds of goodwill. Goodwill can be basically classified into two broad categories. The first one is purchased or acquired goodwill. The next point is self-generated goodwill. Now we can see the first point, that is purchased or acquired goodwill. The purchased goodwill is the goodwill acquired by making the payment in the cash or kind. It is usually happen when a firm acquires the businesses of a sole trader or another partnership firm. The excess amount of the vendor or seller over and above its net assets, that is means we can see assets minus liabilities. It is termed as purchased or acquired goodwill. The Accounting Standard 10, Accounting for Fixed Asset, specifies that purchased or acquired goodwill that can be shown as in the asset in the balance sheet since it is purchased like any other asset through the payment whether it is the cash or the kind. Then we can see the self-generated goodwill. Self-generated goodwill is the goodwill generated internally. It arises from a number of positive features of a firm like that is the higher profits, business connections and regular clients, valuable brands and any intangible benefits to the firm, etc. It is valued whenever the partners decide that there is a need to ascertain the value of the goodwill. As per Accounting Standard 10, the accounting for fixed assets, that is the generated goodwill, cannot be shown as an asset in balance sheet because no consideration is paid for self-generated goodwill. It is useful to readjust the rights of the partners through the payment of each other on the admission, retirement and methods of valuation of goodwill also. Thank you.